Good morning, everybody. Hey, it is Tuesday, May 10th. This month is just flying right by. Yesterday, another down day. We'll talk about maybe, just maybe, we can see a little green ink today as hopefully there'll be a little bit of a recovery. But we'll talk about that and more when Dave joins us here in just a few minutes. But before that happens, let me just remind you that there's so much out there that we just cannot control. Obviously, we don't control what happens in the markets. We can't control what happens in the local economy. We can't even control what's happening in Washington, D.C. So what does that mean? Well, it means that there are a few things you can control. And one of the biggest things that you can control is how much risk you have in your current portfolio. And if you don't know what that risk number is for you, that can be a problem the closer and closer you get to retirement. Those things need to match up. Give us a call and let's walk through our core retirement design where we can help you design the retirement you always dreamed of. Call us at 863-382-0037, or you can go to our website at statlerfinancial.com and there's a link to our calendar there. You can schedule just a 15-minute phone call and we can go over your current situation. Hey, with that, we've got Dave coming up next.
Oh, boy, we're at 8:39 now. It's 21 before 9. Time to check in on money and see what Wall Street's doing to us this morning. It was another bloody day yesterday on Wall Street. It kind of looks like the bottom fishers are coming into play this morning based upon what I'm seeing. Let's see if Phillip Statler from Statler Financial Services agrees. He's on the phone. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. I wish I could say yesterday did well, but it did not. It was a pretty crappy day, as you would say, when we see what the markets come to. But hopefully there's brighter skies ahead.
I'm hoping so, but I'm still thinking bottom fishing after yesterday. Dow was down almost another full 2% yesterday alone, 654 points down. The S&P 500 was down almost 3.2%, down 132 points. And the bloodbath continues on NASDAQ. It was down 4.25%, down $521 yesterday. And that's kind of why I'm thinking that the green ink we're seeing on the futures this morning, you start to think the bottom fishers are starting to come out right now. Wouldn't you suspect?
I would think so. I mean, I did run a quick number on the S&P 500 just to see where we were off the 52-week high. And boy, Dave, another day like yesterday, and we would be in bear market territory for the S&P 500. It's down 17.4% right now.
You know, about midway through the day yesterday, I had a couple of minutes to spare, and I did the math, and I was reading about 17% down, and I had about the same reaction. One more crappy day like that, and we've now got a darn near universal bear market. The NASDAQ's been there already. It's 25% off its year-to-date, and that makes it considerably worse off its all-time high. This is just not a good time for equities, and kind of addresses advice that you've been giving at the end of the show every doggone day, that having a plan and minimizing the risk in your retirement portfolio is really a good idea right now.
It is, especially people that are getting close to retirement. And what's close, I'm going to say 5 years, maybe even 10, because here's what I've learned over the last, 25 years or so, is that when the bear markets come, if you've got a well-balanced portfolio and you ride it through, typically it's going to take 4 to 6 years to get back to even. So if you're 5 years away from retirement and when you hit a bear market, then it's going to take you another 4 to 6 years to get back to even, not ahead of the game. So that's why it's so important that you understand the risk and what that's going to do to your portfolio, and make sure you've got it mitigated somewhat in your portfolio the closer you get to retirement.
Absolutely. The idea is insulation from risk and looking at what you've got. Sometimes taking a risk is worthwhile because there's another word for it, upside potential. But how much time do you want to have? How much time do you have to capitalize on that upside potential is the variable. And we've got it going on in spades in just about every corner of the investment marketplace right now. One of the news items that I had was that the dollar has been getting stronger. Isn't that great news? Well, maybe and maybe not. What the stronger dollar means is that our imports are going to be somewhat under control as far as price hikes are concerned with the inflation the way it is, but transporting them from the port is still going to be more expensive. And cheaper imports mean harder for our own manufacturers to compete. And then you go across the pond, it makes it harder for us to sell stuff overseas. So a strong dollar at this particular point in time is not necessarily what we're looking at. So we're in a time where even good news isn't necessarily good news anymore, is it?
Well, that's true. I mean, from an economic standpoint, where we are right now, the strong dollar does not help us for all the reasons you just mentioned, and people don't really realize that. But that's that's one of the things that is concerning. Is that we want to be able to sell our goods and services overseas, and a soft dollar helps that. I mean, we don't want it to be too soft, but there's a balance that needs to be had there, and right now, we need it to go the other direction, Dave.
Absolutely. Other factors going on. It's been on the top of my network news every doggone hour. The price of gas just overnight last night is up by like 11 cents a gallon. And I'm fully expecting to check my Twitter feed or my Facebook feed and listen to somebody saying, but wait a minute here, the price of oil went down to $102 a barrel from $106. How come they're charging more? Folks don't realize that this is gasoline that folks bought at $110 a barrel just a week or two ago, and they got to sell that as well. And they also price their retail price based upon what they expect to happen next week as far as what they're going to have to pay. And a quick downtick in price per barrel for 1 week at a stretch, number one, we might not see that in the pipeline now for a couple, 3 weeks. And number two, who's got faith that it's going to stay that low given conditions the way they are?
Well, that's true because it's been all over the place, right? And so, I mean, we've been back below 100. We've been well over 110. So, there's a lot of uncertainty when it comes to the oil market, and the markets don't like uncertainty, and so that's going to push the gas prices a little higher. When oil does settle back down below 100 for a while, then you'll see it start to drop back down a little bit.
Absolutely. And one has to keep in mind, too, that when you look at the oil futures the way we talk about them in the morning, that's simply another investment market. That $101 a barrel price is not necessarily what somebody goes to the grocery store and buys it for. That's what the futures prices are and the expectation of 2 or 3 months down the pike. And it's driven by investor sentiment, just like the equities markets are. And that causes kind of an interesting warble at times as far as the price of our gasoline is concerned. The only economic number that I got this morning was a survey by the National Federation of Independent Businessmen. Once a month, they put out a small business optimism index. Last month, it was 93.2. The release this morning said it held steady at 93.2, which you could consider good news, except for the fact that it's a 48-year low in terms of business optimism for what the next 6 months is going to yield.
Yeah, that's right. So it sounds good that it stayed the same, but as you said, being as low as it is, and how long it's been since it's been that low, that's not a good sign. And some of the articles I've continued to read continue to say that the small businessman is still not very optimistic about what's going on right now in the economy.
And we're seeing that reflected in the guidance coming out of the stocks that are doing their quarterly reports as well. And that's one of the things that's driving the market down. The fact of the matter is, even though they may be making their earnings per share numbers and making their revenue numbers in places, the guidance that we're seeing going along with those quarterly reports has just not been real optimistic so far this season, has it?
It really hadn't, Dave. And I don't know if you have these numbers, but yesterday, about 11, a couple other numbers came out. The consumer 1-year inflation expectation for the next year actually dropped 0.3% from 6.6 to 6.3%, which is probably good news. And then another number that comes out is the consumer 3-year inflation expectation. Not no real numbers behind it, just what the expectation is. And that number went up a little bit from the 3.7 to 3.9. And I think that's really saying that's going to be the average. They're thinking that'll be the average for the next 3 years going forward.
Did you ever think you'd see 4% inflation being welcome news for us?
And for 3 years, I mean, that's a big number. And that means it's going to be high at the beginning and low at the end. So for an average of 3.9%, that's just still weighs heavy on me.
Absolutely. The other thing that hits me on that report is the short-term expectation they were talking about for the rest of the year. The consumer ain't stupid. We're in an election year. Government's going to do everything it humanly can before November to keep inflation capped off so we don't see a worse report than we're getting now. And the consumer is saying, yeah, I get it. We're going to get a little bit of relief between now and the end of the year, a little bit. So my expectation is for leveling off. But then again, once we get past November, bets are off.
Exactly. Exactly. So there is some concern to get through the election cycle and what's that going to do to our economy going forward.
Speaking of the economy, how is it treating the companies that are reporting? I understand one of our big elective expenditure companies reported, Norwegian Cruise Lines. How are they doing?
Yeah, they did. Norwegian reported they said their bookings are now exceeding the pre-pandemic levels. So it's got to be some good news there. They did report a loss of $1.82 a share. Now that was bigger than expected. They expected like $1.53. So that's not good news on that front. However, the booking information is good news because that's looking forward. That means we've got more people wanting to cruise down the road, which is good news for Norwegian. And so they're up about 3.5% this morning.
That's good to hear. Did they say that their bookings revenues, is that the reason they missed? They're selling at a discount in order to fill up the boats?
It did not give any indication about revenue, but from what I've seen, I think demand's high enough that they're not having to discount much in terms of ticket prices.
Okay, well, that's good to hear.
Now, of course, Norwegian got beat up pretty bad yesterday, Dave. They were down 12.7%.
Holy crud.
Yeah.
That must have been expectations. Of course, everything got beat up, but 12% is exceptionally in the case of a day like yesterday.
Yeah, and we got more bad news out there than we got good news today, folks, unfortunately. So we've got Peloton. The stationary bicycle was their big push into the fitness equipment, and they made some other stuff, but they had a larger than expected quarterly loss, and they projected a current quarter revenue below estimates due to soft demand. I mean, Peloton's really suffered and has some issues with their name and some other things this last a year or so. And so they're trading down 22% after closing down yesterday, 10%. So in 2 days, we're down over 30%.
Good Lord. And a plot sideline on Sex and the City triggered all of this. That's amazing to me.
And so it'll be a new 52-week low at $11 a share compared to $1.29 is the 52-week high. I mean, 129, not $1.29, $129 was the 52-week high. So that's a pretty big discrepancy.
I think I'd call them a takeover target sometime soon, wouldn't you?
Yeah, I think so. Novavax reported. Now, Novavax is a vaccine maker. They missed their top and bottom line for the last quarter. They shipped 31 million COVID vaccines during the quarter, but they were expected, get this, well off the pace of 2 billion shots in 2022. So they're suffering big time today too. They're down almost 27% today. Again, a new 52-week low right now at $39 a share. And I tried to find you a little good news to stop on. And so here it is. Vroom. I'm not really following them a whole lot, but they're an online used vehicle seller. They posted smaller than expected quarterly loss. Revenue exceeded expectations. They did announce some changing in the C-suite. The chief operating officer is going to become the new CEO. And here's the first I've really started to see of job elimination. And I wonder how much more we will start to see of this, Dave. But they are restructuring and will eliminate 270 jobs over the next couple quarters. So I think we're going to start to see that more and more as reports come out. But Vroom, now, granted, it's not a high price stock. Okay. It closed yesterday at $1.08. $1.08. But today it's up 60%. It's at $1.73 right now.
I'm glad you were able to find some good news anyway in there.
Hey, it was hard, but hey, look, and I think that's really good news, right? To be up 60%. That's some good news.
I'd be happy if I were in that line of work. Resetting the table for the morning, it was just basically crapola all day yesterday on Wall Street, which really sank our indexes down toward the commode. 45 minutes before we're open this morning, Phillip, have we got green ink and how much of it?
Hey, we still do have some green ink, and it's looking pretty nice, actually. The Dow right now is up 0.9%. S&P 500 is up almost 1.2. And the NASDAQ 100 is up almost, a little over 1.75%. So you got to like that. And the Russell 2000, let's throw that one in this morning. It's up 1.5%. So, hey, a lot of good bouncing off, as you said, a lot of maybe bottom fishers out there thinking now's the time to jump back in. Nobody knows for sure, though, right? And then silver's getting a little bit of a bump, not much, but up 0.2. Gold's up 1/10. Both of them are still relatively low. Crude oil is tracing up a little bit, 0.25% to 103.38 a barrel, off our morning lows.
Oh, shucks. I was seeing it at 101, and I was saying, could it keep going down? No such luck, right?
No such luck, my man.
And that, people, is why your gas prices are not going down. Overseas markets, the Asian rim, pretty much off except for the mainland Chinese market where the government evidently issued some buy orders. They were up 1% at the close this morning. European markets are looking at our rebound and saying, oh, thank God, maybe it's over. They're all up substantially midway through their day. Phillip, I saw a survey this morning saying most Americans think they can afford their retirement. I don't want to think. I want to know. How do I get a hold of you to know?
Absolutely, Dave. They need to give us a call at 863-382-0037 to walk through our core retirement design, where we help you design the retirement that you always dreamed of. Again, give us a call, 863-382-0037. Then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here together again tomorrow morning about this time on Light. Phillip, thank you so much. You have a good day, all right?
All right, you too.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hey, if you like our show, please like us on Facebook, share it with your friends and family. Hey, we're not just here in Sebring. We can be anywhere in the United States. We can help anybody wherever they are. Just keep us in mind for our core retirement design. With that, hope you have a great day. I look forward to speaking to you again tomorrow. Take care. Bye now.